Right then. We are back. We got the face cam figured out on the laptop, and today we're gonna get into the moves, what I'm looking at, and the last couple of days of trading. Yeah, unfortunately the camera's like mirrored because it's my webcam. So yeah, I look a bit fucking wonky to be honest. But right, so let's get into it. Unfortunately, just quickly, I can't hide the toolbar whilst recording with this on screen, which is not ideal, but we'll work with it for now. So, news wise, what we're looking at this week. So, on Wednesday, we've had nothing Monday, Tuesday was a bank holiday, so I didn't trade, and today we've had no news. And yeah, to be honest, I've not placed any trades this week, so it's just, yeah, sitting back. I've marked out my zones where I'll be looking for something to take place. Um, but yeah, Thursday we got no red folder, and Friday no red folder. So not really much news driving stuff to go, other than you know government shutdown maybe ending soon. So that is a bonus at least. So that should pump a bit of money back into the markets. Um, we are seeing continued speculation that there's more of an AI bubble. Michael Berry's short in. There's a lot of institutions bearish at the moment, and like, how long can this money just be rerouted between these like companies that are involved? It's like Oracle, Nvidia, OpenAI, Microsoft, I believe, and yeah, just a couple other things. So, although weekly time frame looks bullish on the Nasdaq, and S&P is pretty similar. Um, yeah, it's difficult to call at the moment, to be honest. We just have to keep trading day to day with these fundamentals in mind. Um, but with all that being said, let's just get into the moves that I've been looking at. So to start off with, we were looking at, is it on the daily? No, it is the hourly. Okay, so no, this was yesterday's move, right? So let's get into it quite simply. Uh, Friday, we got this down here: inverse fair value gap in the PM session, and then weekly opening gap from Friday to Sunday. So this is kind of like the model playing out, but just on a higher time frame. Obviously, that would be the breaker structure there with the weekly opening gap. We had, I think, what was that? Was that 4 hour? 4 hour fair value gap here, and then the move up to take the previous weekly high here. So, I was looking at this, but it's not completely my model, which is like the intraday version of this. It's just a higher time frame playing out. So that's helpful for us to determine a bias for what we're looking at. So at the moment, I am quite bullish this week, just because if you look at this, we do have highs to be taken, and I think that aligns with not the Dow, with the Nasdaq. So I'll get into that in a minute. I'm mainly looking at this at the moment, rather than the S&P, just because the S&P's kind of already done its thing, and we traded back down. So I wouldn't be surprised if we come up and we get a bit more going on, mate. Do you know what I mean? So yeah, so with that in mind, let's get into the Nasdaq, what I've been marking out, what I'm doing. To start, we have the new week opening gap here that I've marked out as a higher time frame point of interest, and we've got this 4 hour fair value gap here above these relative equal highs here that we have not yet swept. So either way, the market's going to come to one of these points. Whichever one it goes to first, that's when I'm going to be looking at, aligning my confluences with my model to see if there's a setup forming. And until that happens, I don't really see myself taking a trade until then, because there's no need. And the probability of the trade coming through, once price has a reaction, or if price has a strong reaction off one of these points, is a lot higher than it would be normally. I did mark out a couple bits today just to keep an eye on things. And yeah, so obviously, if we're looking at the intraday business, we had price trade above previous daily high, sweep the Asian highs, and we've got London highs here. These were swept just afterwards, and then dropped down into this. Was this 30-minute imbalance? Yeah, so we dropped down into this zone, traded back up again into order block. Is that an order block? You know, we just sort of traded back up again. And then at 9:30, the market just went straight down, no opportunity. Now, this trade here that I've marked out, I've not taken this just because there was a 15-minute inverse, but I'm not comfortable with this as my inverse, to be honest, purely because it just doesn't seem like there's enough in it. It was more the 30-minute chart I was looking at. You know, if we properly get involved here, you can see it's like a very, very small gap. And like I say, I was thinking of this bullish bias towards this higher time frame point of interest. So I wouldn't be surprised if, you know, today's trade in below previous daily low acts as, you know, price, then gradually moving down into this zone, and then we start making our way up here. Or if it's the other way around and we end up trading down past here and come up here and then make a move down here. From what I'm thinking, it would be more likely that we come down here first, just to continue the trend upwards. If we look at the 4 hour, you know, 1, 2, 3, I mean, it's very possible we could come up and take these highs. Like, this is a definite draw on liquidity on the 4 hour. On the 1 hour, they are still relatively equal highs, but you can see here this point isn't exact. You know what I mean? It's like dropped. So yeah, a bit sidetracked there, but the actual move, you know, the criteria, most of the criteria for a trade entry here was available. This wick kind of had an impact on my decision as well. Like, if we ignore the wick, you got that as an inverse and just stopped very, very tight above that, which I didn't actually mark. So I did mark it like that. So stop would have been just above. And then we had the breaker structure here. Break down off this. Actually, let me just make that a bit tidier, just so it does sit a bit nicer on the wick. There we go. And then from here, you know, there wasn't really a fair value gap, or was there? No, there was, but it was on the 5 minute, and that's if we take 1, 2, 3 candles here with the up candle that I sort of missed as the retracement. So the fair value gap would be chilling around in here, which price does wick nicely up into. Let's mark that out there. So that would be the entrance. Tap you in. Ignore this because I wasn't really focused on trading today. It was just sort of like, you know, that could be a potential move back up. But I wasn't going to take that because it's not part of the model. So let's get rid of that. And back to business here. So if we had a limit order, you know, on this fair value gap, stop just above the inverse and target previous daily low, then that would be 1.55 to 1 risk to reward, which, to be honest, isn't really my favorite. I like to get at least 2, just because I feel more comfortable risking it in terms of my model. I feel more comfortable risking, say, for example, what would it be? 2 units, yeah, 174 for 269. It's enough, but like at the same time, like, I don't know, I would just feel more comfortable if we had higher time frame point of interest reaction before this taking place. Like, it's already quite low down into the previous daily range, and yeah, I just didn't take it because of that reason. So you can see we've sort of come down here right before, what is this, AM. So we've sort of lined up with yesterday's AM lows for New York, but not swept this yet. Let's have a look at the NASDAQ. The S&P, sorry. Yeah, so this is more just like trading down into this imbalance here on the 15 minute. And then we've just got like quite a nice reaction. We had a little sweep here. So this would suggest more bullish price action as that acts as an SMT. Actually, no, they both did the same thing, so ignore me there. Yeah, I think on the 30 minute, yeah, you can see price comes down into here, and also this imbalance here just wicks it. So there's not really much need for it to go much lower here. As you can see, we're getting a nice push over the lunch hour at the moment. What are we at? 12:30. What's the time? 12:37. Yeah. So it's one of them. It's one of them. No trades for me today, and yeah, like I say, until we reach one of these levels and we get a nice reaction off it and we get entry criteria, then I don't see any need to get into a trade. Really trying to stick to my rules this month because, over the last couple of months we have taken quite a few losses, but the winners have paid off, and I think just sticking to my rules, being patient, just makes more sense. Um, as you fucking know. So with that being said, what else are we looking at? I think that's pretty much about it. In terms of my stock portfolio, I'm not going to go into my eToro, but we got a massive drop on take two following, what was it? Can't remember what it was, but basically the market's dropped. I think it was a tariff or something. Yeah, can't remember off the top of my head, but we got a big market drop, so I took that opportunity to buy the dip. I got in about 239 on the way down. So in order to do that, I trimmed a bit of my Palantir position and added more to my take two. GTA 6 got delayed again, so it's now coming out in November 2026 rather than May 2026. So that gives a bit more time for the stock to grow, really. Like if we look at this here, the growth since 2013 and GTA 5 coming out to GTA 6, I brought this up many times, $18 a share from GTA 5 release to now. What are we at? We're at like 240. Well, all-time high at 264. So, if we could see another cheeky run like that up to like 400, 450, that would be spot on. Bitcoin sort of hanging about 100K mark. Just, yeah, not really done much with Bitcoin recently, so not really added much, which maybe I should, but I've just been allocating my funds elsewhere. But yeah, other than that, gold I think is also doing the same business, similar what we've been up today. Ooh. Gold sort of recovering from last week on its way back up. I've got a couple of imbalances here. Not too focused on it at the moment, but I keep my eye on the news to see what's going on. Potential hedge. I know that silver has come back up. It's made a bit of a bounce. So my positions in silver ETFs are improving. I feel like there would be more upside to that in the future than gold. Obviously, gold is the standard reserve commodity. So, yeah, that's going to do it for trade recap, market analysis, all of that news and stuff. In terms of me personally, I've had a look into what is it called? It's called Take Profit Trader. So I am considering opening up a funded account with these guys because they have a nice set of rules, to be honest, and I've heard good things about them. So like, say if you had a 50K account, profit target 3 grand, end of day trailing drawdown 2 grand. I would be risking about $500 to $1,000 on a trade with my model, $102 a month. And I think all you have to do, number of days trading to pro account, 5 days, minimum days until first withdrawal process immediate. So it's like you get up to 3 resets and you can go to pro account for $130. It's 80-20 split. So I'm considering doing this, to be fair. Whether I do it at the end of the year, if I do it next month, just so I can build a bit more capital. Just makes a bit of sense, really. Like, do you know what I mean? I haven't done a funded account for a while, so it is just one of them. I'm feeling like trading my own money is good, but like the capital, not to say it's not bad. It's just like, I feel a bit more comfortable with this model now. I think I could scale it up a bit, and I don't personally have the capital to do that. So getting a funded account would make sense. Just see what I can do. It's not too expensive, so I might be testing that out depending on, what sort of platforms they have. I know they use TradingView charts. I'm not sure if they use like Trade Locker or something like that. So yeah, it's one of those. We'll see how we go, and pretty much that's gonna do it for me. Yeah, that's gonna do it for me. I'll be back tomorrow, and I will see you then, mate. Bloody hell.